Hello and welcome to Policy Bazaar. I'm Arjun Bhagat. Now, cancer is an absolutely debilitating disease. If caught early, the disease can be controlled and treated, but doctors believe that a person once diagnosed with cancer is always susceptible for a relapse. Now, one of the largest consequences of a cancer diagnosis is the financial implication. The immediate concern is, of course, meeting the treatment and associated expenses. So, what are the medical options for an individual when it comes to cancer? To help us understand this, we have with us Yashish Thaya, founder and CEO of Policy Bazaar. Welcome to the show, Yashish. Give us an overview about a person who is diagnosed with cancer and what are the options available. I mean, from a larger perspective of Mediclaim and health insurance in India.
It happens to a lot of people. Officially about 10 lakh people get diagnosed with cancer every year, new diagnosis. And once they have cancer, people survive for a few years. So on an average, we would have about a few million people at any stage suffering from cancer in the country. It's a very large number. The options they have from a financial perspective of taking care of this cost are essentially three. One is what is a general health insurance coverage. Now, in a general health insurance coverage, basis the sum assured that one may have taken, whether it's a 5 lakh rupee policy, whether it's a 10 lakh rupee policy, up to that amount, one would get. It is on an annual basis. So if one has a health insurance plan which pays 5 lakh rupees, there are certain plans which will not penalize you because you made one claim. And hence the individual could make a claim of 5 lakh rupees every year for the next 5 years and not get penalized for it. These are plans which essentially have no claims-based loading, which is why I always say buy a plan which does not have claim-based loading, because it wasn't your fault that a disease kind of hit you. But once the disease hits you, the insurance company has taken on that risk. And the second mechanism through which cancer can be covered, cancer and related disease, because not just cancer, there's lots of other diseases, heart, brain, neurological
Pretty
system.
much affects the entire body.
Yeah. So about 35 diseases get covered by critical illness plans. Now, the advantage of a critical illness plan is one can get a larger cover at a lower price than a health insurance plan. And this will not cover the usual dengue or even the smaller cancers sometimes will not get covered by this, but this is for the larger diseases. When those diseases hit, they have financial implications in excess of 5 to 10 lakhs. And hence, taking an entire health insurance plan all the way to the 30 lakh rupee cover is probably not the right thing. And what people can do is take a critical illness plan. Now, critical illness plan comes in two versions. One is a one pay. So, disease found, it's a 20 lakh critical illness plan. Here's a check of 20 lakh rupees. No bills required, nothing required, end of story. And then there's a multi-pay critical illness plan, which can pay up to 3 times for unrelated diseases. So if somebody has a cancer, if somebody has a nervous breakdown, kidney replacement, for all three, you get paid 3 times 20 lakhs each. Hopefully that doesn't happen to anybody, but if that happens, then one gets paid. The third, very specific type, because remember, when one is looking at cancer, the disease has an early stage, a late stage, and it's not just the treatment, but the diagnosis also costs a lot. The taking advice from the best doctors also costs a lot. Sometimes that advice may not be available in the country, it may have to be taken from abroad. So a basic health insurance policy would not cover all the aspects of what is a basic health insurance policy. You got to go to hospital, be in the hospital for a period of 24 hours, and you get paid for the stay you have in hospital, right? If you take advice from a doctor based in the USA and it costs $5,000, which I know a lot of cancer patients end up taking, that's not going to be covered in a basic health insurance plan, not even in a critical illness plan. For that, you have specific plans which are cancer care plans. These plans focus a lot on prevention, early detection, and treatment within stage 1. And they take on diagnostic costs, they take on regular test costs, they take on all of those costs. However, while they tend to be lower cost than critical illness plans and health insurance plans, they do tend to be slightly high on cost And why would you take just a cancer plan? It's unless you have a very specific heredity of having cancer.
And that's what my question to you is, that a reasonably healthy person, maybe in their late 30s, 40s, that's when you really want to enhance your cover. I mean, that's something that you've been talking about. Now, how do you actually decide that? I mean, how do you say, all right, one has said, all right, you should have a solid, health cover, right? Then one is, trying to tell people, get a critical illness. So how does the third step come in, where you say, all right, now get a cancer-specific plan? I mean, how does one actually go about planning for something like this?
So unless one had a specific heredity of cancer in the family, I wouldn't advise a cancer-specific plan, because it's likely to be more expensive than a critical illness plan. If your chances of getting cancer are just as high as anybody else in the country, and your chances of getting somebody's chances of getting a heart disease or a neurological disorder or a multi-organ failure or a kidney failure is just as high as anybody else, in that situation, a critical illness plan is actually best suited, along with a base health cover.
It covers a large number of
diseases and not just one disease. However, in the situation where one's region or one's community or one's near, in our DNA tree, if very close to us there's been cancer around and serious cancer happening there and multiple occurrences of it, then certainly I would advise a cancer plan, because your probability, that individual's probability of getting that cancer are far higher than average. And in that case, it's good to have that plan, because that plan allows you to take care of prevention costs, early detection costs, diagnosis costs, and late stage support costs if they become necessary, and more importantly, avoid ever getting into the late stages. So cancer plans become very critical for such individuals who have that form of situation. Otherwise, a critical illness plan plus a health cover. So basically, whatever the individual's income is, a health cover about 1 times that, the maximum of about 10 to 15 lakhs, and about 2 times that of a critical illness cover should be sufficient. One has to remember that in a normal critical illness plan, a lot of smaller cancers are not covered. So that's especially non-life-threatening, skin cancer, certain other non-life-threatening cancers.
And is it, you talked about expenses, and you said that cancer plans are expensive. Can you give a comparative between a critical illness plan and a cancer plan in terms of, a rough ballpark figure of costs involved?
Okay, so a cancer plan will be cheaper than a critical illness plan, in the sense
because it's only
a 5 lakh cover for a critical illness plan. Suppose that costs you about 5,000 rupees, and the cancer plan might cost you 3,000 rupees. It makes sense because one is covering 35 diseases, one is covering only one disease. So in a cancer plan, if that individual has that one specific disease, they would get a more extensive coverage. However, in case of those 34 other diseases, they would have no coverage. And so even for the individuals who believe they have a higher propensity for cancer, even for them, along with the cancer plan, I would still suggest a critical illness plan. So a cancer plan is not a replacement for a critical illness plan. It's an enhancement. It's an enhancement of a critical illness plan. Just like a critical illness plan is not a replacement for a health insurance plan, it's an enhancement for the health insurance plan. However, for the people who are more well off, for the people who have substantial income, for whom a 1-2 lakh rupee cost from a disease is not going to set them back very badly, I would go ahead and say for such people, it would make sense to have a critical illness plan rather than a health insurance plan. Because maybe they can pay for the first 50,000 rupees or 1 lakh rupees or 2 lakh rupees of health cost on their own. But if they have a serious disease, which is going to cost them upwards of 2 lakh rupees, and the critical illness plan starts to hit in, because that kind of a disease can only occur if it's a critical illness. Otherwise, which other disease can one end up paying 2 lakh rupees for?
Right. And we all know that often the detection of cancer takes place very late.
Yes.
Sometimes you're on the 3rd stage when you get to know that it's cancer. Now, what about term insurance plans? Because if suppose you have that in your mind that you may get cancer, the expenses may be prohibitive. Now, term insurance plans also offer a certain payout in case you're diagnosed with a life-threatening situation.
A terminal,
or does it make sense? I mean,
see, in a term insurance plan, some companies have this clause of terminal illness.
Right, that's what I'm talking about.
Now, remember what a terminal illness means. A doctor will have to certify, and it will have to be cross-verified, that the individual has no chance of surviving or condition improving. That's what a terminal illness is. So essentially, it's a prepayment of the
life
cover.
Life term that, yeah.
So if the life cover is 1 crore rupees, what a terminal illness means is 25 lakh rupees can be paid on the terminal illness. However, it's not just saying I've got a terminal illness. It's about a doctor certifying that this disease is incurable, and more importantly, the chances of this person improving at all, even in the short duration,
So what you're saying is that's not an option, because I've actually heard that logic from people where they've said, get a good term insurance, so if medical expenses are really high, then they give you a pay.
Term insurance does not take care of medical cover. Please, let's appreciate this very clearly. A term insurance will only pay in case of death. In case of a very, very small sliver where you reach a situation where the doctor has said, look, there's 3 months or 2 months, and there is zero chance. Most doctors will not give you that in writing, that you have a 0 chance of survival, 0 chance of improvement, because that is the only condition in which a terminal illness plan will pay. Otherwise, the terminal illness plan will not pay. And that's very important for consumers to know, because they may be taking the terminal illness plan from a perspective that in case a cancer happens, then I'll get 25 lakhs. No, that's not the case.
Right. So now coming back to
but a critical illness plan does that. A critical illness plan, in case a serious cancer is detected, and you have a 25 lakh rupee critical illness plan, then the critical illness plan will pay the entire 25 lakh rupees. Whether the bill is 2 lakh rupees or 10 lakh rupees, that's immaterial. That's what a critical illness plan does.
So then how does one, I asked you this question before, at what stage should one supplement or enhance one's cover? Should one do it at the age of 40 or 35, or when should one go in for all these critical illnesses and all
anybody between 28 to 45. I say 28 because that's the stage in India where a lot of people tend to get married. Right. We've noticed this from data.
So my question is, we've got the basic health cover. When do we enhance it?
I think the critical illness plan should be taken as early as possible. Definitely before the 40s, because after that, chances of you getting the critical illness plan reduce dramatically. If I get one large disease, the chances of me getting critical illness are 0. I will not get it. So one has to take these covers before. We've had so many people calling in and saying, I have this disease, nobody's giving me a cover. Of course, nobody's going to give cover after it's become a certainty. One has to take the cover before it became a certainty, when it was still a risk, when it was still a chance. And usually 40, 45, we notice in India a lot of people at 40, 45 because of our life conditions, because of the kind of, whatever. So that is the age. Before that, if you have it, it makes a lot of sense. Critical illness must definitely be covered. Now, disability cover, I just want to clarify, should be taken as early as possible, because disability arises from accidents, and the maximum accidents happen between 25 to 45. See, if we stay with those same 6 principles which I always mention: death, disability, critical illness, health, pension, and child planning. If we go in that order, we'd be fine. We don't need to think beyond that. But all of those do need to be covered. And cancer care is a very specific cover, which, as I said, should be taken by people who are either in their early stages, if they can still get it, or who have a high propensity for cancer. So
very quickly before we take a short break, talk about disability cover just a little bit. What are the options available? Because that again
almost
is a very
every company has a disability cover. It's a very low cost cover, in the sense one can get a 10 lakh rupee cover for roughly about 100 rupees per month, less than 100 rupees, 960 rupees per year. So roughly about 75 rupees, 80 rupees per month. And this cover covers an individual in case of partial, permanent, temporary, or so partial, complete, or temporary or permanent disabilities. There are different amounts that are paid in case of every disability. Disabilities can happen anytime. One is driving, one has an accident, one loses more than one finger, that's a disability. One loses a hand, eyesight is gone. There are lots of reasons. I don't want to go into it because it's so, negative. But the point is, disabilities do happen. A lot of accidents happen, and in accidents, disabilities are higher than death. pretty obviously.
So that's another insurance you feel is
specifically
important.
between the ages of 25 to 45, the chances of disability are very high. From 45 onwards, the chances of critical illness are very high.
And that's when you're actually taking care of your family, you've got a lot of expenses. And
so my view is a base health cover with a early disability cover is very good. At about 40 years of age, if one wants to enhance it with a critical illness cover, it's a very good idea. If somebody has a specific disease proneness like cancer, then please, there are certain communities where cancer is more prevalent for reasons that are not best known to us, but it is there. Then certainly take a cancer care cover, and the base term cover should always be there once one has got dependents.
Now Sunil Ahuja writes to us. He says, I have a cardiac problem and I have a policy, and I wanted to ask if it will cover me after 4 years.
So it totally depends on what cardiac condition, the nature of it. Every company has different underwriting. Yes, there are exclusions which are largely around pre-existing diseases. They exist for 2 to 4 years depending on which plan one is taking. There are certain plans which are around cardiac care, which will even cover you from an earlier stage like day 1, etc. But again, for what they will cover is a very specific question that one would have to get into. Now, if you have declared fully your heart condition and it has been mentioned as a pre-existing disease, then yes, once the cooling off period of 4 years is over, diseases related to that pre-existing disease will start getting covered. That's for sure.
Right. We have Ritukant from Orissa, and he says, hello, I'm 25 years old. I'm married for the last 8 months. I have a term insurance plan covering me for 50 lakhs with accidental rider. I want to take a life insurance plan which can give me a good return at the age of 45 when I expect my children to be opting for graduation amounting to about 20 lakhs and also get a regular income of 1 lakh rupees per month. How should he go about planning his life there? He's got a lot of questions.
I think he's in a very good situation in the sense he's sorted out his term plan. I hope he sorted out his health plan. I hope he has some kind of a critical illness cover. What the gentleman is essentially saying is his children are going to require about 20 lakh rupees as essentially settlement expense for education. So for that, you should take out a child plan. The reason I mentioned a child plan is because a child plan, with whatever unfortunate event may happen with all the waiver of premiums and income support coming in, they will provide the child with those funds at the right age, whatever happens. And I think that's the most important part about a child plan, and that's why it's different from any other form of investing. A lot of people say, take FD versus term cover. Those don't solve the problem. The problem is the child has to have that amount at the right time, and that's what a child plan will do. So, and as far as the pension plan is concerned, where he's basically looking for about 1 lakh rupees per month from the age of 50 onwards, essentially he's got about 20 years to go before he gets to that stage. My view would be if he started investing about 15 to 20,000 rupees a month right now, he would be in very good shape to organize that 1 lakh. The mechanism I would suggest is going for a low cost ULIP. So start investing about 15,000 rupees a month into a low cost ULIP. That's roughly about 1.8 lakhs a year, and start building up your corpus. If you were to do that over the next 20 years, you'd have a significant corpus, and I think you would be able to manage the 1 lakh rupees from there onwards. The mechanism again would be take that corpus, put it either into an FD and start taking the interests out and start using that. Alternatively, put it into what you call an annuity or a single pay annuity plan, and you would start receiving annuities from there at roughly about 6.5% is the going rate right now. The interest rates after that period might obviously be different.
Right. We've got Mr. Jha writing in from New Delhi. He says, I was detected with lung cancer about 2 months ago. My life insurance policy has a critical illness rider. How will this policy operate now?
So a critical illness rider in a life insurance policy becomes almost disconnected from the life insurance policy. So in case so life insurance policy will continue. You have to see if there is a waiver of premium attached with the critical illness. If there is, then you don't need to pay the premiums any longer, and the life insurance policy will still continue. That you need to check. However, for the critical illness that has been detected, you would need to inform the insurance company that I've contacted this critical illness, and you would need to give proof of it. So some doctor would need to declare you've declared that you've got this critical illness. There may be some checkup, and after that, whatever critical illness cover you had, you would receive that lump sum. So if you had a 20 lakh rupee critical illness cover, you would receive the 20 lakh rupees. It's as simple as that. And your life cover would continue. Check for waiver of premium, because if waiver of premium is there, you don't need to pay any more premiums. If it is not there, you will need to continue to pay the premiums for the base life insurance cover.
Right, we've got Gaurav writing from New Delhi. He says, is Canara HSBC OBCE Smart Term Plan the cheapest term plan in the market?
So there is no term plan in the market that is the cheapest across the board. It depends upon what age you want to wish to take the cover. It depends on how long you wish to take the cover. It depends upon how much cover you wish to take. And it also depends upon what additional riders one requires. So riders, policy tenure, age at which one is buying, and the amount of cover one is taking. As I mentioned, there are roughly about 13 companies out there. Reliance Life, HDFC Life, ICICI, SBI, Tata, Kotak, Aegon, Aviva, Bharti AXA, Max Life, Canada HSBC, India First. There's a huge range of companies out there, and depending on your convenience, please go ahead and buy. And remember, price is not the only point, so you would need to take care of those factors: how long you want the cover for, what amount of cover you require, and also. And there's a very important question I get a lot of times: should I take the longest cover? Remember, as you take the longest cover, the amount of cover you get starts reducing. So there's a fine balance between how long you want the cover for and how much cover you're going to get. So balance it out and look at the add-ons as well. And yeah, then choose. But there are quite a few options.
Right, that's all the time that we have, Yashish, on this show. But do write to us at ask.policybazaar.com. You can tweet us at policybazaar_in. And we'll see you next time with another show. Goodbye.